Imagine a company so secretive that most people have never heard of it. Yet it handles 10% of all stock trades in America. A firm that makes billions by buying and selling stocks in microseconds. Today, we're going to uncover the story of Jane Street and how this mysterious trading giant got caught in India's biggest market manipulation scandal worth 36,000 crores. Let me explain Jane Street in the simplest way possible. Think of it like this. You know how, when you go to a vegetable market, there are vendors who buy vegetables wholesale and sell them to you at a slightly higher price? Jane Street does exactly this, but with stocks. But here's the difference. While a vegetable vendor might make 10 rupees profit per kilogram, Jane Street makes tiny profits of just 5 paisa per share. Sounds small, right? But they do this millions of times every single day. Founded in 2000 by 4 brilliant minds, Tim Reynolds, Rob Granieri, Mark Gerstein, and Michael Jenkins, Jane Street started as a small trading firm in New York. 3 of these founders previously worked at another successful trading company, and they brought one secret weapon: speed. While you blink once, Jane Street's computers can complete thousands of trades. They use advanced mathematics and super-fast computers to buy and sell stocks, bonds, and other financial instruments faster than anyone else. Jane Street makes money in 4 main ways. First, they act as market makers, meaning when you want to buy a stock, they're ready to sell it to you, and when you want to sell, they're ready to buy it from you. They keep the small difference in price. Second, they do arbitrage. If the same stock is selling for 100 rupee in Mumbai and 100 rupee in New York, they'll quickly buy in Mumbai and sell in New York, keeping the 10 paisa difference. Third, they bet on market movements with their own money. And fourth, they provide technology services to other companies. By 2024, this formula made them incredibly successful. They earned $20.5 billion in revenue. That's about 1.7 lakh crores. In December 2020, Jane Street looked at India and saw a golden opportunity. India's derivatives market, where people trade contracts based on stock prices, was huge. In fact, about 60% of the world's stock derivatives trading happens in India. But there was a problem. Foreign companies aren't allowed to do certain types of day trading in India, so Jane Street got creative. They set up Indian companies, JSI Investments and later JSI2 Investments, while keeping their foreign status for other types of trading. This clever structure allowed them to trade in ways that should have been restricted. They could buy and sell Indian stocks during the day through their Indian entities while trading derivatives through their foreign entities. It was like having 2 different identities for 2 different purposes. Here's where things get interesting. In April 2024, Jane Street filed a lawsuit in America against their former employees, claiming they stole their secret billion-dollar India trading strategy. Ironically, this lawsuit meant to protect their secrets actually expose them. When Indian media reported about this lawsuit, it caught SEBI's attention. That's India's stock market regulator. SEBI thought, wait, what billion-dollar strategy are they talking about? And they started investigating. What SEBI discovered was shocking. Jane Street had developed two sophisticated manipulation strategies. Let me explain them simply. Strategy 1 was like a pump and dump scheme. On days when options contracts expired, Jane Street would buy massive amounts of bank stocks in the morning, sometimes worth 4,000 crores. This would artificially push up the Bank Nifty index. At the same time, they would bet huge amounts, sometimes 32,000 crores, that the same index would fall. Then in the afternoon, they would sell all those stocks they bought in the morning, causing the index to crash down. Their bets against the index would then make them enormous profits. On January 17, 2024 alone, they made 735 crores profit using this strategy. They spent 61 crores to manipulate the market and earned 735 crores. That's more than 10 times return in a single day. SEBI didn't just rely on suspicion. They analyzed massive amounts of trading data and found a clear pattern. Between January 2023 and March 2025, Jane Street had used these manipulative strategies on 18 different occasions. The scale was mind-boggling. Jane Street had made total profits of 36,502 crores from their Indian operations. To put this in perspective, that's about $4.3 billion. Enough to buy several major Indian companies. SEBI even warned Jane Street in February 2025 through a cautionary letter asking them to stop these practices. But Jane Street ignored the warning and continued manipulating the market even in May 2025. On July 3, 2025, SEBI dropped the hammer. They issued an interim order banning Jane Street and all its related entities from trading in Indian markets. They also froze 4,843 crores of their profits. This wasn't just a slap on the wrist. SEBI called Jane Street's actions egregious manipulation and said it held hostage the faith of millions of small investors. The regulator made it clear that even the world's most sophisticated trading firms must follow Indian rules. Jane Street, predictably, disputed these findings and said they would engage with the regulator to clarify their position. But the damage was done. Their Indian operations came to a complete halt. The Jane Street scandal teaches us several important lessons. First, that in today's world of high-speed trading, manipulation can happen in microseconds. But regulators are getting smarter at detecting these patterns. Second, it shows that no matter how sophisticated or successful a company is, market manipulation is still illegal and will be punished. Jane Street's technological brilliance couldn't protect them from regulatory consequences. Finally, it reminds us that behind every stock trade, there are real people. Small investors who trusted that the markets were fair. When that trust is violated, regulators like SEBI are there to protect them. The Jane Street case is still ongoing, and its final outcome will likely influence how similar cases are handled worldwide. It's a reminder that in the digital age, both market manipulation and market regulation are becoming increasingly sophisticated. Thank you for joining me on this journey into one of the most significant financial scandals in recent Indian history. The story of Jane Street proves that in the world of finance, what goes up through manipulation must eventually come down through regulation.